Well, good morning. As Jill said, my name is Courtney Ross. I am the Cultivate Growth Program Manager at GreenStone Farm Credit Services. Cultivate Growth just means our young beginning and small programs. So that's how Greenstone has branded those programs over the years. I have been with Farm Credit for almost 14 years. This role, I'm in my second year in this role. It was a new role created a couple years ago. It's been a great experience so far. Prior to that, I was a loan officer serving Gratiot and Clinton counties here in Michigan. And still something I do a little bit. So I kept a small portfolio of young beginning and small customers to just kind of make sure I can stay up on everything and in the know to be able to help not only our external customers, but also our staff and how we can best serve our young beginning and small customers. So what we'll do, I guess I will say my husband and I also farm, although sadly we're no longer young or beginning. We have aged out of that. But we did certainly start there. So we farm in Gratiot County, corn, soybeans, and wheat. And then we also finish out about 100 head of beef cattle. So kind of coming at it from both sides of the coin here. So as Jill said, today, this is kind of what we're going to get into. I want to go over the whole lending process. I know sometimes it can be really overwhelming if you're just starting out. You have to call a lender and you have to ask to borrow money. Hopefully after today, we can help lay out some of those expectations, some tips and tricks on how to work with a lender and how you can be prepared. So we're going to go over, before meeting with your lender, what can you do? What the lending process looks like from application through closing and disbursement of your loan funds. And then I do want to touch on at the end some other related services that we offer, as well as some other resources that you might be able to take advantage of. So certainly if you've got any questions, feel free to throw them in the chat. Hopefully Jill can help me kind of watch those as they come in. But we'll definitely pause as we go through as well. So we will get right into it. So before meeting with your lender, what can you do? It's always good to be prepared. Oftentimes, if you call into an office, they're going to give you a list of documents that you will need and you can bring to be prepared for your appointment. It's really good to at least start thinking about those documents or what some of that information is. So even if you've never filled out a balance sheet, if they send you a template, at least take a chance on it. Try it, go through, even make a list on the side if you want. What is that information they're looking for? A business plan, it doesn't have to be in real detail. We'll go over each of these bullet points here too in a little bit, but then also having an idea of what your request is for. Have some sort of plan in mind of what you're looking to use that money for. So no one business plan is going to look the same. These are just some thoughts of what you can include in your business plan. I know there are lots of other templates out there. MSU Extension has one, and I know they came and spoke at our Cultivate Growth conference in the past as well about building a business plan. But ideally, some thoughts is you're going to want to include a description of your business. What is it that you do? Who all makes up the business? Do you have a partner? Is it a spouse? Is it dad? Is it uncle? And then what does the management structure look like? Is there an LLC or is it just a sole proprietorship still? What does that look like? Any goals that you have? So where do you want to be in 5 years, in 10 years? And maybe you don't have that all planned out yet, and that's okay too. Do you have a team set up as far as an attorney, an accountant, a nutritionist, if that's applicable? It's okay if you don't have that either. This is something that you can continue to build upon as you go through and continue to grow your business and the longer that you're farming. The other big one is, where do you plan to market your product? So ideally, we're going to lend some money. So how are you going to pay that? Where's those funds coming from? And then your business plan should also include all of your financial documents, which we'll get into here as well. And then this last bullet point can be kind of scary to think about, but do you have an exit strategy? What happens, or what's a plan B? So if none of this works, what would be your next step to do? So always good to think about and to have a plan B. Certainly that's not what any of us want, but definitely good to just forward think when it comes to that. The financial statements that we'll be looking for, this is just a broad overview here. So in no particular order, there's your balance sheet. Think of this as a snapshot in time and is a list of all of your assets and your liabilities. The date is what's important on this because it is that snapshot in time. It's really good if you can date it and then do it at the same time every year. For example, most of our balance sheets we like to see are dated at the end of the year. So 12/31, assuming that you have a fiscal calendar year. Because then we can kind of match those balance sheets to your tax returns and there's no adjustments that need to be made. And then year over year, if you fill it out at the same time, we can watch and see your improvement. Or, maybe you go, oh, I just saw. Can you guys hear me okay? Yes? Okay. All right. Um, so then we're able to see year over year how things can progress. Your income tax returns, this is a historical result of your business performance, right? So what have you done year over year? Now, if you're just starting out, those tax returns may not necessarily reflect this business moving forward, which is okay. But your lender is still going to request those tax returns. It can help us even show if you have any non-farm income, because we're going to take that into consideration as well. Profit and loss statement is going to be very similar to your tax returns. So for example, if you come in and it's October, November, and you need to borrow money, you're not going to have your tax return for that year yet, but we're going to want to see how the years progress. So what has been your income so far and what have been your expenses so far? So that's more of kind of in that moment when you don't quite have your tax returns or a recent tax return, we'd look to request a profit and loss statement. And then your projection is think of as your budget. So it's going to be your cash flow statement for your future business performance. What if you are buying real estate? What's the income that you're going to make off that real estate? And then also, what are those expenses that are going to increase as associated with that? Okay. So here is an example of a summary page of a balance sheet. Assets on your left, liabilities on your right. The top section is going to be for your current assets and liabilities. So your liquid assets, what can be sold and liquidated for cash, and then your liabilities in the current section are those liabilities due within 12 months. So that's the current portion of any debt that you have, any accounts payables out there, any other operating loans, any taxes that are due, that type of thing. Your intermediate term is reserved for those assets such as your vehicles or your machinery and equipment. And then your long term is going to be any real estate or buildings that you own is what's going to go in that section. There are a lot of balance sheet templates out there that you can use. The most important thing for me is that you understand the information that you're providing. So whether you are doing your own in Excel or you're writing it down, the most important is that I can always put it into our system and put it in the format that we want. But as long as you can understand it, that's the most important thing. I think, we have some resources on our website for a template that you can use. I like an Excel template, to be completely honest with you. That's what we use for our farm as well. And then I just save it year over year. Your lender is going to ask for details. So they're not just going to ask for, how many, so a crop inventory, for example, is one on here. Okay. And then you put a dollar amount on it, but your lender is going to want more detail. They're going to want to know how many bushels you have, if it's contracted, what that amount is. So being able to schedule all that information out is also really helpful when it comes to your balance sheet. So your income and expenses, can be either your tax return or that profit and loss that we discussed. Here's just a snapshot of a Schedule F from a tax return. So income's laid out on the top, expenses on the bottom. So your profit and loss statement can be mirrored just like your Schedule F would be if that's what you're filing. Or you can use this just as the same template. Another idea, this is a snapshot of the projection form that we provide, again, on Greenstone's website under our knowledge and resources section. Same idea. It's got the income at the top and then all of your expenses mirrored after a tax return on there. So that's definitely a resource where you can start. Again, it's scheduling out that income. So rather than just, that blanket dollar amount for what you're expecting for your income, what are the numbers behind that? So X amount of acres, expected this many bushel, or this many cattle, and you're going to sell them at this weight for this price. So, and then also something to keep in mind on your projections and your income and expenses is any non-farm income that you have. So many people like to keep things separately, but when you're a sole proprietor farm, so it's just you or a spouse, we are going to look to consolidate all that information, farm and personal, because personally you're going to sign on a loan as well. So the more information that you can provide, the better. Doesn't mean that a lender's going to grab it all and list it all as collateral in all cases. That's not the case. But what it would be and what it would entail is just giving more of that information to help the ratios that we're going to go over here in a little bit. So are there any questions on any of the financial documents?
Are these available online, or are they available when you take a meeting initially?
Both. So great question. So a lot of times if you call into an office, a lender may ask for an email and then they can send you the documents ahead of time to start working on it, or they are located on our website now. If you go into resources and then knowledge and resources, there's links to both the balance sheet and the projection worksheet.
Okay, that's excellent. So I guess that was my other question is, how do you prep for a meeting? If you're interested in meeting with you, is there any good prep materials that you can do before you come into the meeting so that you're kind of ready to go?
Yeah, absolutely. So pulling these resources ahead of time and thinking through them, we don't expect you to get every category. And we don't, there's a lot of information on those balance sheets that aren't going to apply to every operation either. But if you can at least start thinking through some of that information, do you have any crop inventory or growing crops? How many acres of it? How many bushels? If you can come prepared with that information, and then when you sit down with the lender, you can use that time to fine tune those documents and fine tune those balance sheets rather than starting from scratch. That's going to be a really good use of your time and your lender's time.
Excellent. Thank you so much.
Yes, thanks for the question. The last part of that being prepared is knowing, kind of having a plan. What are you requesting money for? So do you need operating money and an equipment loan? Do you just need an equipment loan? Are you looking to purchase some land? So just having an idea to be able to articulate your needs to your lender rather than just, I need some money. Kind of have a plan in your mind of what you need that for. If it's multiple things, having a list that you can provide is really helpful as well. We've got lots of different types of loans. A line of credit is for those operating funds. Those are typically written for 1 to 3 years, and it's used. Take the operating loan, purchase your inputs, and then as you harvest your crop, pay that back. And then that's available to be able to use to purchase any inputs for the following year. A short-term note is usually what we call a 1 to 7 year note. This is used for like machinery and equipment, your other depreciable assets. The idea here with the terms and the long term and the short term is that we're matching the life of the loan to the life of the asset. So we're not going to finance a tractor over 30 years because that it's going to be depreciated out and no value left after that point. And then your long-term note then is reserved for those 10 to 30 years, real estate purchases, and then any other facilities and improvements. We've kind of covered the financials that you're going to be asked for, and then tips for being prepared for a meeting with your lender. I'm going to get into the lending process next. So you're starting with your initial meeting and application. It's usually good to call in and set up a meeting. That way, you know you have someone's full attention and you're in front of the right person. So if you can just stop into an office too. Greenstone's got, if you're going to use your local bank, that's fine too. Otherwise, Greenstone has 36 locations across Michigan, so that's an option for you too. But if you schedule that appointment, you know that you've got that person's full attention. You didn't interrupt, anything or caught them in the middle of a phone call. They're prepared for that meeting. You might even consider meeting with someone in advance of what you might need or when you first learn that you might have some financing needs. That meeting can help you start to build that relationship with that lender and gives you a better understanding of everything that they're going to need in order to process your request. It also ensures that if you are going to work with FSA or the Farm Service Agency in any of their participation loans, that you've got ample time, because sometimes those timelines get a little bit longer when they're involved. The initial meeting would include different options that you might have as you're talking through your request, discussing your business with your lender, especially if it's the first time that you're meeting with them. It's your opportunity to ask the expectations of the lender. What do they want to see? Ask them what the process looks like. Ask them how long their timeline is. What are the fees that are going to be associated with your transaction? Most of Greenstone's loans that we write are going to be on a fixed rate without a balloon. Every situation is different, but generally speaking, but some of your local lenders may not do that. So make sure that you're getting a loan that everything there's going to be no surprises. Does it balloon? Is it an adjustable rate or is it a fixed rate? So it gives you the opportunity to talk through all of that. And then once you go through all that, they may say, if you've brought your financials and you're ready to go, they may go ahead and have you fill out and sign the application at that time. They're also going to request that documentation, or you're going to provide them with that documentation that we just went through. Business plan, again, it doesn't need to be elaborate. Current balance sheet for farm and personal assets. Something that we see left off that I noted on here is retirement and investment accounts. So if you have a non-farm job and you've got a retirement account, that's a large asset. So make sure that you're including that. If it is a sizable amount, we may ask for statements to go along with the balance sheet, your last 3 years of your tax returns, and a projection. Again, those tax returns may not reflect moving forward, but lenders still probably going to ask just for those historical returns to have on file. And then an invoice or a purchase agreement from a dealer or from a realtor, if applicable. You may not have that when you first start the loan process, and that's fine. A lot of times, you don't want to enter into a real estate contract without knowing that you're approved for the loan. So that's fine as well. Just keep in mind that it is something that's going to need to be provided as soon as available. So kind of the big mystery after all of that is what happens now? So you've met with your lender, you've provided them all these financial documents, but what do we do with it? So Greenstone uses what we call the 5 C's of credit in our loan analysis. So we're going to do a high level overview because it can help you understand what happens now. So starting with your character, this doesn't necessarily use any specific documents you provided, but it's where we capture your eligibility, description of your farm, any resources you have, what's your credit score. That's a big one we look at, your credit score and your credit history. So something to keep in mind. And then ownership structure of the business and any management history. The capital then, that next C is using your balance sheet. So that is looking at your liquidity or your working capital, your net worth, and then your owner equity percentage that we look at. That's one of those underwriting standards that we look at would be your working capital ratio and your owner equity. Moving on to the next C is your capacity. So this is also your cash flow, looking at your debt coverage ratios. So do you have the ability to make the payments, existing and new? We want to lend you money, but we don't want to put you in a position that isn't going to be good for you. That kind of leads to kind of after the fact, getting a no answer from a lender isn't a no forever. A lot of my customers that I've worked with, the first couple times we weren't able to do anything, but they kept filling out their financials. We kept meeting at least once a year, and ultimately we were able to finance him, and he's one of my biggest customers now. So just because it doesn't work now doesn't mean it's a no forever. So it's just something to keep in mind. That's another one of those questions after the fact, is ask your lender what you can do to improve or what they would like to see and have those conversations with them. Just a little side note. So back to our C's here. Collateral then, this is what's securing our loan. We don't write at GreenStone, we don't write any unsecured loans because it can also be considered your secondary source of repayment, which we never want to collect on. But that is essentially what it is. So typically, if you're buying real estate, the real estate is what we're going to take as collateral. If you're buying a tractor, we're going to take what we call your chattel, which is considered your tractor, your crops, any other machinery and equipment that you have. And then lastly, that last C is going to be our conditions. So this can be kind of considered the rules of the relationship and accountability from you, the borrower. It can be a number of things. No one loan is going to have the same conditions. It's just really dependent upon the individual borrower. But some common ones are financial reporting. So, making sure that you're providing your financials annually, quarterly, whatever that may look like. Maybe we need an approval from FSA, or we need to obtain an FSA guarantee. Maybe there's a life insurance requirement or a crop insurance requirement on there, are some common ones that we see on some of these young beginning customers. So that's a really quick overview of what we look at when we're analyzing a loan, but that's kind of the gist. And if you hear, oh, it's being analyzed or it's with underwriting, that's what they're doing. They're looking at all of that. And it's really going to depend on, how in depth depends on the size of the loan. So, borrowing $1 million is going to involve a much more in-depth analysis and write-up than, say you're borrowing $25,000. So it just depends. So you've met with your lender, you've got your application, and now it's with underwriting, or they're analyzing the loan. So what does your timeline look like? It's always good to ask your loan officer kind of their expectations and what their timeline is, because different types of loans are going to have different types of timelines, and then different sizes of loans are going to have different types of timelines as well. I will say one caveat is that I'm speaking very generalized here. Again, it depends, and not everyone's situation is different. But for a revolving line of credit or an operating loan, that's going to be generally finalized within a week or so. If you need collateral inspections, that may extend that into a second week. Intermediate term loans, same thing, likely done within a week or so, or I would say a week or two. Collateral inspections are most likely, so that can stretch that timeline out a little bit more. And then real estate loans, there's a lot more involved to a deed transaction in purchasing real estate. So that timeline, you're typically looking 5 to 6 weeks. Unexpected issues that will come up on your title work, which we'll talk about here in a second, could be something that would prolong that process. So generally speaking, a lot of your loans can have decent turnarounds, but again, it all depends on the complexity and the size of the loan. So it's just good to ask your lender what you're in for when you meet with them. So after your loan is approved, or if it's in the analysis and it's looking like it's going to be approved, you may start to hear terms such as title insurance, title search, a UCC search, an appraisal. And these can be very confusing if you're not living in it every day. So, an appraisal is a valuation of the collateral that is being offered. So, whether that be, again, the machinery and the equipment, we have appraisers that um, are specialized in machinery and equipment. So, they may come out and have to take a look. And then same thing with real estate. There's certified real estate appraisers that would come out and appraise the property. The searches being done are essentially verifying the ownership and saying that who is selling you that property actually owns it. We want to make sure that no one else has an interest in that property if we're taking it as collateral. And certainly if you're buying it, you want to ensure that no one else can claim an interest in that after the fact. So a title search is something a title company will do. They'll go back and they'll verify the history and all the deeds that have been recorded over time. They'll see if there's any encumbrances, such as another mortgage on the property that needs to be taken care of, all to ensure that you are getting a clean title on your real estate that you're purchasing. This would also include you purchasing title insurance as part of your loan transaction, and that's part of your closing costs that you would pay. What basically the title company is saying, yep, we agree that if we for some reason miss something and Uncle Joe twice removed comes back after you close and says that he owned part of that 40 acres, they're going to help work through and work through that whole process with you. A UCC search is a uniform commercial code filing. So this is something that someone can go through the state of Michigan and file on your machinery and equipment. So it's basically saying that, GreenStone has an interest in this machinery and equipment. So if you're going to go sell a piece of equipment, someone else could do a search and see that that is already pledged as someone's collateral. So you would need to somehow work with your lender to get that piece removed. But that's just something that as the years have gone by, especially as a first-time borrower, people aren't real familiar with. So I just wanted to make sure that we mentioned that. Appraisals on real estate could take 2 to 3 weeks. So that's part of that timing, and that 5 to 6 weeks. But once your title and appraisals have all been completed, the next steps then would be to look to move to a closing. So the closing process starts with file reviews and getting a clear to close. Once we have that, we can look to get your closing scheduled. So if it's an equipment purchase, that may be just with your lender, more than likely. That can either be done personally or through DocuSign and have you electronically sign the documents. If it's a real estate closing, the title company will need to be involved as they handle all the deed transactions and, again, making sure that you're getting a clean title on that property. And then once your loan papers are signed, your loan funds can be dispersed. So that can either be done through a wire or a check. I'm going to do a little plug here because it's really important with all the fraud that we see currently. To keep in mind and mindful where, like, if you are getting wiring or if you're for some reason mailing a check, which I wouldn't recommend either, but making sure that you understand where that information is coming from. Keep in mind last minute changes or instructions or urgency. If they say, I need to have the money today, or if you've had plans set and then all of a sudden something comes through changing the plans from, we were going to wire it, but now they want to check. Those are kind of the red flags that we've seen in those attempts for fraud. Those bad actors can hack into your email and, really just kind of mess with the whole process. So we try to keep an eye out here, but, the customers really need to stay vigilant in that as well. Always use pre-existing numbers you have. So don't, that email that you get says, please call me at this number to verify your wire changes. Don't use that number. Be sure that you're calling the number that you've already talked to somebody on. just because, that's sometimes we're dealing with large dollar amounts and we want to make sure that we're sending it to the right place. So that's my little plug on fraud. But ideally, everything is done smoothly. We wire the funds and you can pick up your piece of equipment, or the seller has signed the deeds and now you're taking ownership of a farm. So after the closing, we'll get into some tips on that and kind of keep building your relationship with your lender. But are there any questions on the loan process itself?
I guess one of the questions in the chat is, what are the biggest mistakes you see first-time borrowers that they make?
Oh, that's a good question. I would say maybe not being open-minded. So keep in mind, you come in, you're prepared, borrower's prepared, they're ready to go. And then maybe the financials aren't working out quite how we thought they would, or, we want to add FSA in after the fact, and that's not what you wanted to do. But just having an open mind and kind of leaning on your lender to be able to use their expertise and to be able to find what's going to be the right fit for you as far as your financing needs go. And then again, like I said, maybe it's not right now. Maybe the right answer is not right now. Don't just give up. Keep filling out those financials, and keep having those meetings with your lender. And then don't be afraid to bring other opportunities to them.
Thanks.
Okay. Perfect. So what can you do after your closing? So here's just some tips on working with your lender to continue to build that relationship after the fact. Greenstone's we consider ourselves a relationship lender. A lot of our transactions that we do are from current customers or repeat customers. We get to know our customers, their customers' families. So how are some tips that you can continue to do that? So one is being transparent, which is my little asterisk down there. I've used this in another presentation, is don't lie about anything, right? So be upfront with your lender. Be transparent. Again, if you've got property and you really don't want us to take it as collateral, just tell us that and we'll see what we can do. But just being upfront and honest with your lender is going to be key in building that relationship. Know how much you need, why you need it, and how and when you're going to repay it. So again, having that plan and being prepared for your appointments with your lenders. And then using your loan proceeds for only the purpose that you stated on your application. Things change and we understand that. So if something does change, just pick up the phone and give us a call. Let us know, hey, things have changed. Can we maybe use the loan funds for this instead? And then we can talk through that situation. Most of the time, we're probably going to be sending the funds directly to whoever you're buying from. But sometimes, in some cases, we'll just, cash out a situation. You've got multiple pieces of equipment that you want to buy. There's some cases where we'll say, okay, yep, here you go, here's your money, and you'll break it up yourself. So just making sure that you're utilizing those loan funds for what you said you were going to initially. Additionally, provide realistic cash flows. Kind of have an idea and talk through with your lender what your repayment capabilities are so that we can structure your credit needs appropriately. We do offer, annual payments, monthly payments, biweekly payments, quarterly payments, semi-annual payments. So we do work with our customers to try and match to, when's most of your income coming in? And then we can match your payments to match that to try and help you. But using those realistic numbers in your projections is key, especially right now, cash crop that may not look very nice, but certainly it's going to help us, meet your credit needs without putting anyone in a situation where no one would be happy. Communicating with your lender is big. Have your lender out to your operation. Have them come out and see it. Even if it's not much, that's fine. We appreciate the invitation to come out and see what you're doing. And then keeping in touch on a regular basis. Even if it's, you got one real estate loan and you're kind of good for a while, maybe you still fill out that balance sheet and send it over to your lender and just say, hey, wanted to touch base and let you know this is what I've got going on. And then living up to your commitments. If things aren't working, the earlier that you can call, the better. We do all of our servicing in-house at GreenStone. So we've got options that we can work through with you. Other lenders are the same way, right? So if we need to move a payment, we can look in and we can have that discussion. If we just need to do an extension, we can have that discussion as well. But the sooner that you call in, if you can't make your August 1st payment, don't call, on August 1st, call a couple weeks before and give us time to be able to process your request and talk through and see what other options that we have. Okay. If there's any questions, let me know, because otherwise I'll go into just some other resources and support that we have to offer. So we have some internal loan programs that have some relaxed underwriting guidelines for our young, beginning, and small borrowers. So that's something that, if you qualify for, we have done that. We don't expect, someone just starting out to have the same owner equity percentage, for example, as someone who's been doing it for 20 or 30 years. So we've taken a look at those and kind of relaxed some of those for those young and beginning producers. We also partner with the Farm Service Agency, which I'll get into here in a minute. And then we do offer grants. So these are for different programs and classes, not related to a degree program. Business services, so if you want to hire a farm consultant, the first year of tax and accounting services at GreenStone can also be used for this. And then conference or event registrations. Non-customers are eligible for this as well. They can get up to $500, and customers are eligible for up to $1,000. It's a reimbursement program, so you need to apply before you attend the event and then submit your receipts afterwards. The application's on our website. But it can be a great tool. So just something to keep in mind, and I like to put out there for everyone as well. Different loan enhancement options that we have to utilize on a loan. Again, this is maybe where underwriting standards aren't meeting. What we've outlined can include adding a guarantor or a co-maker to the loan. This can either be done through FSA or maybe a family member, or there's another farmer who's sometimes willing to guarantee a new loan to the next generation. We are also a preferred lender with FSA. So we have a lot of customers who utilize their 50/50 and 50/45/5 program. This helps with real estate transactions, and FSA will finance a portion of it, and GreenStone will finance a portion of it with minimal to no down payment requirement. The kind of the big thing and the big draw to these as well, is in addition to the no down payment, is the lesser interest rate on the FSA portions. So your GreenStone portion will be at whatever your qualified rate is with GreenStone. But then the interest rates at FSA are, I was going to look them up before I hopped on here, but I think the 50/50 for their portion is 3.5 or 3.75. And then their portion on the 50/45/5 is like 2%. So very minimal there. Huge benefit to be able to take advantage of those programs if you're eligible through FSA. So a few tips and reminders. No two operators or operations are the same. So your experience might be different than your neighbor's experience. Additional information or homework may be assigned after you meet with a lender if they've got additional questions based on the information that you provided, or they might ask for more detail. We're just making sure that we're making the best decision for you when we ask for that. And then be open-minded to other suggestions. Find ways to maybe offset some of the risk that you're asking a lender to take. This could be thinking outside the box, or maybe you start with a land contract and we finance that down the road. But there's lots of different options that we can work through there. Lastly, related services, just a note on some other services that are available here at Greenstone. We have a tax and accounting department, so they can help with tax preparation. I'd mentioned that with our Cultivate Growth grant as well. Accounting and payroll services. We also offer crop insurance and life insurance is something else beginning farmers or young and beginning farmers don't necessarily think about. But if you do fall into that category, now is the time to buy your life insurance. So we do offer those products, and you don't necessarily need to be a loan customer in order to take advantage of some of these other services that we offer as well. So, which is kind of a misconception and people don't know about, which is why I wanted to mention today. So, with that, I will take some questions.
Excellent information. Thank you, Courtney. I feel like you really simplified the process so we could understand like what are the steps to go through it, and it seems a little bit more manageable.
Right.
Yeah, in the taking. And thank you for that map to show your locations too.
Mhm.
There are a few questions in the chat, but I'll open it up to any comments or questions as well if anyone has any to ask directly to Courtney. Otherwise, I can ask from the chat too. One of the questions was, what are the loan size limits for the special loan program and guarantee options?
That is a great question. And I'm trying to remember. I was going to pull up my FSA fact sheets too. It's on their website. I think it's around 600,000, I think is what their current loan limits are at FSA. The guarantee limits, so the amount of loans that a lender can have guaranteed is upwards of 2 million, I think. But for FSAs, it's like 600,000, somewhere around there. For Greenstones, we have an emerging loan program. So that's for smaller loan transactions of $100,000 or less. That also offers a education program along with it. So if you qualify for the emerging loan, we write the emerging loan, you can enroll into an education program, which is basically a list of events that you attend or items that you complete, and you earn points. And then once you meet all those point requirements, you get a 0.5% interest rate reduction. So definitely something to ask about if you fall into that, if your request is that $100,000 or less. Otherwise, we don't have any other limits on our loan programs or our relaxed underwriting guidelines.
It does seem like there's a lot of creative strategies in working with a lender one-on-one and them finding the right fit for the farmer. It seems like that, yeah.
Yeah.
Are you aware of any other loan programs for small beginning farmers where the size would need to be higher? Is this the size of the farm? Yeah,
Size
go
of
ahead.
the loan, yeah. So our loans, like I said, our relaxed underwriting standards that we look at are for any size loan. So even if you're not meeting some of those guidelines and you need $1 million, like there's things that we can still do and take a look at. That's what we utilize the FSA guarantees for. Essentially, what that is it's a insurance for our risk. So if something were to happen, right, Greenstone is backed by FSA. So if you're not meeting our underwriting standards, that's usually when we'll utilize that FSA guarantee, and those limits are a little bit higher. If we meet those limits and your financials are still, some of the loans that I deal with, maybe we're maxed out on our guarantee limits. There are some cases where we'll take the risk and do some of it unguaranteed, even if you're not meeting our underwriting standards. So there's really lots of different options, and it's just dependent upon the individual's financials. Additionally, if you are trying to utilize the 50-45-5 or the 50-50 with FSA and you max out their portion, in some cases, Greenstone can take on more of that. So, or another lender can take on more of that. So there's options there as well. Whereas, yes, if you're purchasing property and you're going to be over the FSA limit, we still may be able to do that because we can take on more of that loan. So we'd be they'd still be at their 45% or up to their max. We could do more.
Excellent. Does Greenstone still have strict personal or business credit score minimums for farmers as they have had in the past? I'm not sure how far
Um,
in the past that question is referring to, but
yeah, yeah. So it really just depends. If your credit score is lower because lack of credit, that's one thing. If there are, late pays or delinquencies, we're going to take a closer look at that. So, um, it's typically, I could throw out a score. Typically, our minimum is 680, but again, every situation is different.
Mhm.
So it's definitely worth a conversation.
And lastly, what can farmers do today to improve their chances of qualifying for a loan in the future? Like, what can
Sure.
they get started on to be ready for that loan?
Yeah. I'll kind of piggyback off the credit topic. So,
Mhm.
just making sure that you are, with your credit score, that you are keeping that up. Again, or you're starting to build it. There's ways that we can mitigate some of that risk as well, as far as, is there a co-maker that we can add that does have strong credit? But being aware of your credit, that's something that I always talk about when I meet with young and beginning farmers.
Mhm.
So being aware of that, being aware of your decisions, and then starting early on your financials and building that history that you can look at year over year. Even if you don't have a loan request, still fill out your balance sheet.
Excellent. Yeah. Yeah, wonderful. I think we've asked all the questions and I'll stay on a few more minutes with Courtney, but I want to give a big thank you to coming out and presenting this information for MIFarmLink and on the Greenstone topic and the Cultivate Growth program. So thank you very much. Thank you all for coming. And we will see you next month at the next monthly virtual open hour.